Stocks and crypto, they are decoupling. And I'm going to get into why I think they are decoupling and also some crazy economic news that you're definitely going to want to see. And I'm in like a tornado right now, so I'm going to try to do my best. All right. The 10-year is at 4%. It's down from 4.35 a couple days ago. That's pretty massive in the debt market. That means the Fed, like I said before, the Fed is injecting liquidity into the bond market. But what else are they doing? They're injecting liquidity into the stock market too. That is why you're seeing these crazy rises. I think it got close to 29,000 on the Dow. Now it's 31,950. Okay, so it's up a couple thousand points off its low. So yeah, that is the Fed going in there, injecting liquidity into the stock market. And yes, they are. And I'm going to get into some proof that this is what central banks actually do. Okay. Now, stocks aren't up that much. I mean, the Dow Jones is up 0.36% and the S&P is down almost 0.5%. But crypto's flying. Bitcoin is at 20,600 as I'm talking right now, and Ethereum is up like 13%. Yikes. And I think that has to do with what you can expect what's going to happen during the next bull market. You're going to see Ethereum skyrocket because, listen, 100 million, 120 million Ethereum out there, that's not very many coins, okay? And you have the whole world of institutions probably wanting a piece of the Ethereum pie. And because it's proof of stake, they're definitely going to want to hold a lot of it. And that's going to push the price up. And that's why I think what has happened in the past, since June, people have been buying up Ethereum. And they're like big money is doing that, okay? So now Fidelity Investments just said that they are going to hire 16,000 people this year and offering some workers full-time, full college tuition as an incentive. Okay, so it seems like they're going after younger people. Why would they be going after younger people? Do younger people want anything to do with a traditional banking system? Absolutely not. They want crypto, and they're getting more and more involved with crypto. And I think more investment banks are going to start doing that because they're going to start offering their clients Bitcoin and Ethereum and other cryptocurrencies. And yes, there's going to be some regulation craziness going on with the SEC, CFTC, but who cares? You know, like screw them. The rest of the world's going to be like, hey, I want in on this crypto stuff. So, and guess what's going to happen? A lot of these younger kids are going to see what's happening on the rest of the world. Like, hey, you know what? Either you offer this service or I'm going to go to a decentralized exchange. See you later. Piss off. You know what I mean? So yeah, that's what's going to happen. Sorry, CFTC and SEC. Yeah, you guys suck. Here's also some crazy news. 19 states investigate major U.S. banks for pushing ESG policies, killing American companies. This is really interesting. People are starting to wake up and realizing what we've been saying over the past couple years. ESG is a total scam. And I think one of the major reasons why central banks were pushing ESG so hard is because they want their CBDCs, and also they want to change the code of Bitcoin. Bitcoin is the most secure network in the history of the world, and central banks hate that fact. Anyways, moving on to some proof that central banks are buying stocks. This just in, China orders state banks to buy and contain selling. Wow, where have we heard that from? Okay, under Reagan, the Plunge Protection Team was created, which is a government body that buys up stocks and bonds, yield curve control, like the bond market, so they can stabilize the market. And that's essentially what they're doing. They're printing currency, shoving it into the stock market and the bond market, creating massive amounts of inflation for a temporary rise in stock prices. You know, it's been in what, 10, 12 years now since stocks have been rising. Yeah, the biggest bubble ever, and the debt bubble is getting bigger and bigger and bigger. So what central banks are doing now is they've endeavored on quantitative easing, which means simply, it's a big word, but all it means is printing currency out of thin air to prop something up, whether it's the bond market, whether it's the stock market, whether it's bailing out banks like in 2007, 2008. It's the only reason that's there for is to expand the debt market, expand the currency supply, devalue the US dollar, and that is what is happening right now all around the world. There's rampant quantitative easing, but on a total global scale, and now central banks are finally admitting what they're doing. This is going to be very exciting. I'm going to keep everyone posted on this, but please first like and subscribe, and I will talk to you guys soon. Bye-bye.